What's up everybody, Tom here with another video. In today's video, I'll be talking about why this chart is one of the most important to be watching right now in the markets. We'll also be talking about our technical analysis levels for the Nasdaq, SP500, Tesla, Bitcoin, gold, and more. We just saw Amazon earnings, and while they knocked it out of the ballpark, the market just doesn't seem to want to go along with the ride of this earnings season. Let's talk about what's in store for May right now. Stay tuned. Alright guys, well as we always do on this channel, we take a look at the heat maps for yesterday. And you'll see, yes, it was a sea of mixed results. We had mostly greens, we had a couple of reds, notably Tesla here, some of the tech stocks, etc, etc. But the problem with this earnings season and with the market right now is a lot of the big bullish catalysts are out of the way. We just mentioned before that we had the Amazon earnings after the market closed. And we'll talk about where the actual futures are in just a few moments. Let's have a look at yesterday's movement. So we saw some bullish movement into the Amazon kind of earnings call, 0.49 up for the Nasdaq, 0.68 up for the SP 500, and Dow Jones was up 0.71. Unfortunately, the Russell 2000 hanging behind 0.37, and everything was selling off at least earlier in the day. So even those good Apple earnings weren't able to push this thing through. When we have a look at the sectors that were completing money or getting transactions in them, one of them was communications, financials, energy, those value sectors, and most of the growth plays, as in consumer discretionary, technology, and healthcare, were actually all down. And you know they're my three favorites. So when they're down and everything else is up, you start to go, well, how healthy is this market really looking right now? As we mentioned, all the big earnings are out now. You've got ExxonMobil for Friday pre-market. We'll, of course, be going over that one, and I think it's very interesting. AstraZeneca as well coming out Friday pre-market, and these other companies. But the big ones are out of the way. We've had our Apple, we've had our Facebook, we've had our Microsoft, etc, etc, etc. And while the beat rates look great on paper, with 89% beat rates, any normal earnings season is good. Some of these companies aren't beating on their core due to the fact that they had that hyper growth last year. And the market just seems to be lackluster on how it feels about this. And I think a lot of that is how far away we are from certain key indicators. We'll talk about the S&P 500 and we'll measure it out for you throughout this video because it's really important to be watching that right now. So as I said, Amazon had a pretty good earnings report. They knocked it out of the ballpark. They literally made $100 billion in sales. They predict a third on the way. And hey, I've been saying this for a while. Consumer spending is wild. I expect it to maintain just like last time with this monetary policy the way it is, with cash the way it is, and more importantly, with how cheap loans are across the world. They're just so cheap and people are spending. We know this. But the question we have to ask ourselves as traders and investors in the stock market and other markets around the world is, where are we and should we be getting scared? And Amazon and Apple and Microsoft were all massive catalysts to trying to get this market pushed up and through. Should we be following this chart? Should we be following what has been going on since the pandemic lows, since the GFC and the synergies together? Will it be sell in May and run away? When we start to look at the charts, it presents a bit of a story that maybe we should be getting careful. And I've been saying this now all earnings week, and guess what? All earnings week has been incredibly boring. It's not been boring from a statistical standpoint of some companies going up and down. Hey, that's been super exciting. But actually, if you look at the S&P 500 and the Nasdaq, they're almost doing nothing because it's a mixture of how Wall Street is interpreting each one of these. And that mixture is causing a zero effect. PCC yesterday, 0.712. So really not doing that great. This means that there's a bunch of calls still getting opened in the market. And if PCC stays low like it is right now, that usually lines up with our thought process of, hey, there could be something going on in May. There could be a sell-off. Of course, price action is the number one thing we're looking for, but PCC is just like that little 5% icing on the cake. Let's have a look at the dollar index. The dollar index continues to weaken here through our channel. You'll notice on the daily, we've basically just got this consistent sell-off that's occurred here. Daily is key on this. Notice how there's no closures outside. There's only wicks. So this is still weakening. We expect it to get to 90. And then possibly it might turn around at this point, or at least it'll find some base support. Why? Because the dollar index is incredibly strong at that 90 support. Look at this, all the way through January, February and into the back end of Feb, it was quite strong. Then we saw a spike in the dollar index. And what this spike did is it was, of course, happening at the same point as the market was starting to find issues. And as that dollar index strengthened, we did see weakness in the market, that risk on, risk off concept. Let's have a look at silver now, because silver is getting a lot of discussion on the boards around on the internet. Basically, the idea is that on the 1st of May, the 3rd of May, and a few other points in May, there is a group operation to try to create a silver squeeze. I'm kind of cool with this. I mean, you know, I like silver a lot. A lot of people are calling this an inverse head and shoulders here as well. Left shoulder, head, right shoulder concept. And you've got that 2650, which is your resistance. Once you break through the 2650 and close above that, I think you could be looking at a squeeze starting to the 28. And of course, 28 plus, you're looking at 30. Last time over here was where the squeeze occurred. Will retail be able to do it again? It's going to be super interesting to see this one play out. The great news for silver fans is the 20 and the 50 exponential moving averages. These red and green and blue lines, they are both acting as dynamic support. And that means that this level is going to find buying pressure. This is where we expect the buyers to really start picking up. 2650 on the resistance, and hopefully buying pressure around this 2570-ish zone. Let's move over to gold. Gold's been a little bit disappointing, but again, the 20 and the 50 are holding it up in terms of the wicks. It came right back down to the perfect support zone, 1756 yesterday, and gold gave us one false breakout on the smaller time frames. If you go to the 4 hour, you'll see it here. That is a false breakout, no doubt. 1789, closure above those 1783, 1784 levels, and no follow through. Very disappointing here on gold. Now you're looking for it to get above the moving averages here again, though that didn't seem to mean much for last time, and hopefully move above that 1800. I feel like with gold, if you're in it, and you're already long. But if you're trying to get into this as a trade, 1756 was our key support zone. And really, from the buy side, we won't know it wants to go any higher until it closes above here. Once that occurs, yes, okay, then the 1825 becomes incredibly likely to occur once we snap this high off. But gold seems to be quite strange. I mean, it really should be going up against dollar index. It's really copped it since Bitcoin's rise. And since Bitcoin has been doing so well, gold has not been in favor. Great pickup here, shows there is a lot of technicals at least around this zone and buying pressure. I would like it to have another good green day coming into the weekend. And if it does come back down and let's say wick reject off this, that's actually going to be enough for me as well to see that little bit of follow through and then start to pick up more swing trade methods. I would love to see another pull up or pull down, movement quickly up with a wick, and then a little bit of follow through momentum. That's the type of thing that traders really dream about when it comes to looking at the psychology of the market and understanding it. Let's have a look here at the Bitcoin trade and what's going on here. So Bitcoin is still looking relatively weak. I mean, we had that long leg doji, which is right here. There's the long leg doji. And this is an indecision candle at the exact point we expected resistance. 55,000 to 55.5 was our resistance zone. That's because there was a 20 and a 50 exponential moving average on a significant time frame like a daily, but at the same time of that is it was a psychology or psychological zone, and we had some structure on the left hand side. So it makes sense it was going to struggle here. Now that we got a daily close underneath the long leg doji, usually that would mean decision made to the short side. Now I'm always a little hesitant to short cryptocurrency due to the nature of the instrument. It's a retail traded instrument predominantly. Yes, okay, there's some big whales in there. Yes, Wall Street's in there now, etc., etc. But the way that it shorts versus the way that it longs, if you see a long leg doji and it buys, like as in the market goes above the zone and makes a decision, you're more likely to be successful. It is inherently going up during this cycle. So taking shorts here, what is your best case scenario? Probably somewhere down to that 52, 51 level. We'll go to the 4 hour to show you where it could go to. Somewhere around here, 51.2 would be where there's heavy buying pressure. And you can always tell that because you just need to look at where the previous wicks are and the previous structure is going to be. So yes, long leg doji indecision. Technically, the market should fall to around this 51.2. The problem I always have with this market is it doesn't necessarily short as well as longs. And that's kind of like stocks. I've always said if you buy stocks, it's easier than selling stocks. It's just so much easier to buy stocks. So we'll see how it plays out. Of course, here on the 4 hour is all important as well. Let's see if we can get a closure above the 2 moving averages. If that happens, then we actually start to put pressure on the top side. Long lead doji, snap that off, and then we can really move up. But from the sell side, I expect buying throughout the weekend or the Friday session around 51.2. And you'll notice the rest of the crypto market's actually quite healthy at the moment because we are fully fledged in altcoin season. Let's move over to Tesla. And as we suspected, yesterday was not ideal for Tesla. This candle here was really, really bad. It was not ideal, and it really signaled that we'd be moving to the next support. I guess us as a community, we got this completely correct. It came straight back down to our support here at the 667 or the 666 demon number, I guess some people were saying. It didn't quite get the demon. I actually checked it this morning. Not quite on the demon number. I think the low was 668.50 on the day range, and it did have a little bounce off this. Look, for bulls, it's your last level. You gotta see buying pressure here. If there's no buying pressure here on Tesla, unfortunately, we close underneath, and guess what? Back to the 600 for us. Will there be some buying at 625? Sure, because of the wicks there, but I just feel like 600 is coming for Tesla as soon as we close below here. We knew that this was incredibly likely. Now, if we close underneath the 666 level, we're going to move down to the 600, and that could all be in line with the market also really falling off. It's kind of like an early warning sign here that the market might be getting a little bit cooked and maybe a little bit too away from some of the key moving averages. Let's now move over to the Nasdaq and take a look at what's going on over here. And it was weakness. So we knew that the 14,050 was going to be our resistance yesterday on the open. It got 10 points higher than that, sold off immediately, went all the way down to the 13,830. And the time of this recording, we're trading at 13,909. So it's still down in terms of the futures. Long leg doji here on the daily on the actual Nasdaq futures. If we go to the NDX now and we bring that up, you'll notice it looks a little bit different. But really what the importance of all these levels are is that if the market continues to come down and we get a closure underneath this 13,720.25 zone and underneath the 20, where do we go? Immediately down to something like a 13.3. Underneath this level is going to create a little double top, and that double top is going to complete around here, and it's going to begin that capitulation for May. So the price action is going to show us very soon whether the market wants to short. And I know a lot of people are already getting a little bit bearish on this, and I think there is some real reasons why you could be getting bearish on this. We are quite far away from the 20 moving average. We haven't touched it in some time, but it's not so much the US 100 or the Nasdaq that I want to look at. It's actually Apple, and it's going to be the SP 500. So Apple, why do I bring this up? Because it had a good earnings report. By all figures, it looked really, really great, but it failed to hold up yesterday. 135 was breached in the morning. It came down. It didn't even care about this level, even on the small time frames. Very unusual. And then it sold straight off and did not recover throughout the session very much. Now we're looking at this 132. Do we close below that? The reason this is so significant is we've got to think about the percentage of Apple in the indices, in the SP 500, in the Nasdaq. How big is Apple as a company? It's massive. Has it been a precursor in the past to some falls in the market? Yes. If the sentiment is poor on Apple and it does break to new lows, often that drives many other tech stocks down and they all start to run with it. So I'm very, very, very cautious around this 132. I'll be watching this like a hawk, and we'll have laser eyes during our live sessions pre-market to be looking at this one, guys. So 132 on Apple, we need to watch that. We need to be very aware of it. And of course, the S&P 500 did give us a breakout yesterday, but is it a false signal? And that we don't know. It moved up. It moved up the little technical kind of level that people would have been trading, which is this little range here. We're so close to this trend line, the community trend line. And I think for me, this whole thing comes down to this. And this is all about risk reward. Pretty much whenever you go and talk to any fund manager, they're always going to tell you the same thing. What's the risk adjusted return? I want to know what the risk adjusted return is. I don't care about what you made. How did you do it? and how much risk did you take getting there. So if we think about the percentage between the current price and the 20, it's 8%. So it's 8% away from the 20. Last time around, it was 7% before it returned. If we go back over here to the most euphoric we got in the market, it was around, what's that, around 12, 10, 11%. So we're getting very close to that point where you think, okay, something bad could happen here. Even over here, we were 7%, and we were still going to probably become into some kind of correction. You go back into the past and you think about these markets here, 5, 6%. It doesn't always get that far away from the 20, but when it starts to get like that 8 to 9%, look over here, back in 2018, things get a little scary, guys. I've got to be real with you. This is the way that I think about the markets. Risk-adjusted returns are important. Were we super crazy bullish for April? Yes. Are we super crazy bullish for May on this channel? Maybe not as much because of some of these technical reasons. And it's that subjectivity that always makes it interesting. Some people are saying, well, do you close your longs? Well, it depends. Are you prepared to hold them through this? I mean, you could always be wrong about a return here, and the market could go up euphoric and go on a bender like nothing else and be up here at 4,800 by the end of May. The thing about all of these things is you've got to be prepared, and you've got to have plans for all situations. If you have cash on the sidelines, is this the time that's best to buy? You've got to make your own decisions. But of course, this is what we're all about in the channel. We're trying to empower everybody with the thought processes that some of us go through when it comes to these types of decisions. All right, guys. Well, if you enjoyed the video, please smash that like button. Of course, subscribe, and we'll see you 1.5 hours early before pre-market open. I'm keen on Friday, and I'm super keen to see what happens next week. Who is pumped to see what May brings us? Bye for now, guys.